Welcome to part one of our Rent to Own series. We put this series together to help you understand what type of programs are available for you in the Philadelphia area, how those programs work, what it takes to get approved, and what's the process when we go out shopping for a house to move you in. Hello, I am John Smart with eXp Realty. I go by Smarty, and I've lived here in the Philadelphia area my whole life. I love helping families find great houses to call home. I'm excited to share 3 programs that I represent with eXp. We'll call these partners A, B, and C. Now, these partners all have a similar approach to get started and finding a house. But once you find the house, they have different processes on the back end of getting you to move in and once you're in the house. So let me explain. The similar processes is quite simple. All 3 partners have a simple application you're going to fill in. As long as you meet their minimum requirements, which I'll have documented in the next couple days in the videos, you'll get approved. We go shopping for a house and you find the perfect house for you. The partners will buy the house for you and move you into rent for 1 to 5 years. Now, where they differ is their approach in buying the house and what happens once you're in the house. So let me explain. Partner A is really intended for families that do not want to buy right now. They would rather just rent something very nice with a right to purchase maybe down the road. These are for families that may have just sold a house and they don't want to go into the market again and buy something else at the top of the market. They just would rather rent something nice until the market settles. Or it may be for families that are moving in from out of town and they want to try an area before they buy. With this program, the partner will buy the house for cash. You'll require 2 months security deposit to move in, and they're going to move you in as a renter for 1 to 5 years. At the end of 1 year is really your only obligation. If you don't like the house or ready to move on, you'll get your security deposit back and you had a great place to live for that year. You also can extend your lease for up to 5 years. And at any point in that 5-year period, if you want to buy it, you have a right to buy contract that has a pre-negotiated purchase price that you can execute to buy out that partner. You'll go find your loan and you'll come to the partner and say, we're buying you out. So you're locking in the home price ahead of time and you could buy it down the road, but only if you want to, not an obligation. Partner B and C are traditional rent-to-own partners. Partner B uses cash to finance the house. Now, because they're using cash in the financing, they want a little bit of money up front from you, usually a 1 to 3% down payment money, where you're going to put down payment money in, and they'll go out and buy that house for cash. They're going to set up a 1-year lease for you, where a portion of your rent is going to the down payment of the house. And at any point, you could elect to purchase that house at a pre-negotiated purchase price. After 1 year, they're going to move you into a month-to-month lease until you're ready to buy that house. And if you don't buy the house, you can walk away from the house, get your security deposit back and down payment money, and move on. Now, Partner C is a great program, and I'm actually really excited about this program. It's new to Pennsylvania. This program uses FHA financing to buy the house. So Partner C will buy that house for you and set up a 30-year fixed loan to buy that house. Now, what are the benefits of that? Well, the first benefit is when you move in, there's actually there's no down payment money. There's some closing costs that you have to pay, but you only have 1 month rent to pay when you get the keys and move in, and you're in that house. Your rent is going to be fixed for the whole time you're in the house. And this partner will give you 1 to up to 5 years to live in that house. You'll have a fixed rent payment each and every year. What they also do is they set the purchase price only 1% over what they paid for the house. And that's fixed for the time you're in the house. And they're going to provide a team to help you get ready to get approved for a mortgage to take over that loan. Now, I just mentioned take over the loan. You see, with FHA financing, A financing vehicle under FHA is assumable. So what that means is you don't have to go out and find another mortgage with Rocket Mortgage or Bank of America and come and buy the partner out. The loan is already in place. You just assume it, and now you take ownership of the house. What a great way to get into a house. And guess what? If the market goes the other way and interest rates go lower than where they are today, you could still go out to Rocket Mortgage or somewhere else and get a loan and come back and buy that partner out. But in this case, you're locked in with a 30-year fix. So if the interest rates go up in the next couple of years, you already have a low mortgage to take over that house. So I hope this video as day one really opens up your eyes on what's the possibility. There's 3 great programs, and they all have different great benefits and needs for different people. What we're going to be doing in the next couple of days is going over the requirements of those 3 partners and what it takes to get approved. So I look forward to seeing you the next session.